Good afternoon, Google Cloud community, and welcome back to Google Cloud Next here in Las Vegas, Nevada. We are midway through our 3 days of live coverage on theCUBE. My name's Savannah Peterson, joined for all the fun with Dave Vellante this week. We're going to learn a lot of things covering every part of this ecosystem, and this one we were talking about earlier. I bet you're excited to talk about risk.
I am. I mean, you know, cyber risk, the value proposition has always been a reduction in my expected loss, but I'm interested if you can make things like insurance a value attribute to a business. That's where I want to go with this.
Yeah, well, I guess we'll get to captain that ship and we'll take it there. Without further ado, Monica and Matt, thank you so much for taking the time to come hang out with us today.
Thanks for having us.
Excited to be here.
Busy and exciting week. Monica, I'm going to start with you because the notion of cyber insurance, maybe not front of mind for everybody else, but I know it's a core part of the risk protection program that you announced that's expanding right now. Give us a bit of the lay of the land and why this is such a critical topic today.
Yeah, absolutely. So at Google we see cyber insurance as part of our holistic risk management strategy, and we're really focused on this idea of shared fate, which you may have heard of in other sessions, of how do we partner with our customers all the way through the ecosystem, from secure infrastructure to secure blueprints, to security products, to offering an outcome via insurance. So when we think about insurance, it's more part of the holistic approach to how we think our customers should think about security, ultimately driving down risk as much as they can, but when there's residual risk, having options through insurance to cover that. So we've been partnering with cyber insurers for the past, I think, 4 years on a risk protection program, which I'll talk about in more detail, but very excited about the integration with the insurance community.
Think about when you rent a car. You know, they say you want the insurance, a lot of times you say no. I've made that mistake before, so now I say yes, I take it.
Oh.
Okay, but it's very transactional, it's one and done. Cyber insurance is different, right? There's a partnership between the insurer and the insuree. So, and that has evolved over time. I wonder if you could talk about sort of from your perspective, Matt, sort of the history and the evolution of cyber insurance, you know, where it came from and where we're at now and where it's going.
Yeah, so today it's almost a $20 billion gross written premium industry. It's been around for about 25 years. There's a number of different markets, both in the United States and globally, estimated to be in the range of 70 plus insurance carriers who underwrite cyber insurance. And all of us are focused on underwriting strategy. So again, the motivation of underwriters are to understand frequency of losses and reduce severity of the impact, all the while reducing risk overall. Cyber insurance, again, if we were to go back maybe 2001, that would be an in-person underwriting meeting with large risks that might last for 3 days. Over the course of the last 25 years, we range everywhere from 7-second underwriting all the way to in-person meetings with large, sophisticated organizations. You know, the background, and just from a historical perspective, you take cloud and cloud adoption. We were often educating customers about the cloud in 2008, 2007, including white papers around education and showing kind of the importance of the adoption of cloud, but also some of the pros and cons of that adoption process to make sure it's done right. As insurers, you know, when bad things happen, we are there for claims, and the cyber insurance market over the years has learned if we lack underwriting or if we lack a certain control, then obviously we see and bear the consequence of that in monetary terms. What's exciting now is really getting into a bit more depth on what are good cybersecurity controls and motivating customers to adopt those controls. You know, again, and Google Cloud as an example of that, and some of the data sharing that we're working towards.
And be proactive, because you're basically helping a customer with their posture and saying, hey, these are the 10 things you need to do to plug the holes, or this port's open, right? I mean, that's part of the service.
And as advanced as underwriting has become, again, most markets have underwriting models that are fed or infused with threat intelligence, similar to that from Mandiant or you know, the Google Cloud team. And our underwriting process aligns to those things that cause losses, right? So
I was just going to add, I think a lot of times we hear from our customers, specifically CISOs, that they have these long PDFs that are yes or no questions that don't really reflect the way that they're thinking about risk and the metrics that they're looking at. And so one of the things that we're doing with our risk protection program, which we're expanding, announcing today at Next with Chubb and Beasley, in addition to our founding partner, Munich Re. But one of the things we're doing with the program is driving us to a place where there's more automated underwriting, and there's an ability for the same metrics that a CISO is looking at to manage their own risk. Those same metrics are being used by the cyber insurance industry, and through a couple clicks, you can share that from your cloud platform to the cyber insurers. So to your point earlier of like, what does that interaction look like? I think we're on this journey to get us from where auto was 10, 20 years ago of answering how many miles you're driving to telematics. And cloud is key to that transformation because of the scale of cloud providers and the ability to facilitate that transfer.
It becomes a business, I'm sorry,
No,
it
please.
becomes a business enabler because we have to fill out these PDFs all the time.
Yes, we
You
do.
know, and or you can't do business. And a lot of the questions are like, that makes no sense. You know, so what we could do is call our cyber insurance partner, and they help us, and they bring credibility to the table, so it becomes a business enabler.
What's exciting is our threat intelligence team at Chubb, we went through a variety of different controls and put together a list of controls that do in fact matter. So controls that do in fact either reduce frequency or control for severity, shared those with the Google Cloud team, and it turns out that a lot of us see eye to eye on controls that do in fact matter. And so the benefit here is one, sharing that information. Again, we're a market that's focused on sharing claim data. We've been doing this for almost 10 years now, putting out reports. We have an online index as an example, but learning from those things, from the internal telemetry that Google Cloud has, is instead of a subjective control, we now have an objective control that continuously changes over time, and that's what is valuable to underwriting, and that is valuable to us as we underwrite risks. And from a I'll say Google Cloud user standpoint, or a policyholder as we would refer to it, that's a benefit in that they are also learning the controls that matter, not just from Chubb and other partners, but from Google Cloud themselves.
Well, and they're rewarded for good behavior, or for better posture in this case, just like a good driver is rewarded for not getting in an accident. I think that's important as we push to continue to level up in this space. I mean, with the flood of data and everything else that's happening, these underwriting, these checklists have got to just continuously be getting more robust. How do you, both as a company and you as an insurer, keep up to date with all of the potential risks or threats that should be mitigated, and how to make sure that they're protected in the event of something nefarious happening? I'll start with you, Monica.
Yeah, I think from Google's perspective across the board, I mean, we have Mandiant Intelligence, we have our Threat Intelligence group. There's a bunch of different groups within the company that really allow us to understand the latest threats and trends. We then translate that to the products, and I know there's been a big announcement with Google Unified Security. We translate that to the Google Unified Security group and how to inform our customers. I think what is very interesting about the insurance industry in particular is that that's the only industry that also gets the loss data that's associated with it. So as we're starting to partner together, right, if we're providing the controls up front from verified through a scan, they then have the loss data, we can then work together to start to tell them, like, listen, this is what created the most losses. Because on the Google side, we have a bunch of intelligence that we feed to our customers in terms of what to do, like no question there, but if it's also informed by loss data, it makes it a little bit more realistic in terms of like what's going to drive down their actual dollar loss the most.
And I like to answer this with
Makes a lot of sense.
some insurance history.
Please enlighten us.
The first industry that the fire insurance market realized was not the best to insure was paper mills. So in today's day and age, you would think that that's very straightforward and obvious. We've learned over the years, again, we've been underwriting cyber insurance for about 20 years, some of the more basic and more straightforward things and reasons that cause losses. We have to constantly stay ahead of not just threat actors, but also just mistakes or errors that happen. And by doing so, getting more data as we analyze that as part of the actuarial methodology and actuarial process to then drive pricing specifically for those controls, that is the evolution of all insurance. I mean, at the end of the day, underwriting is reducing risk and premium is uncertainty. And that's ultimately where you reduce uncertainty. I mentioned the objective versus subjective answers. You then, as a result, have the ability to reduce premium, which in the end, the policyholder is learning what matters, the Google Cloud user is understanding that and also understanding how it relates to the cyber insurance purchase itself.
What is your ideal customer profile? Does it span small to medium to large, or is it predominantly medium and large?
So I'll touch on that first. So for the risk protection program more broadly, one of the announcements that we have today is it used to be available just to large US customers. We had almost like a pilot group with Munich Re. And as of today, we're scaling that to all size customers. We're also scaling that internationally to over 30 different countries with Beasley and Chubb and Munich Re as our new partner. So from a Google perspective, we're trying to make this available to as many customers as we can, and our customers are global in all sizes, right? And so that's, as we're expanding the partnership, that's what we're looking to do. And Chubb can speak about...
Same perspective, or is it...
So again, as a global company, top 3 market share in almost every country for cyber insurance, we do have a broad appetite, which I do think is an appealing thing to again, look around the customer base of Google Cloud. There are a variety of different industry that we might have a different strategy on, but generally we're open to underwrite all risks.
Including small business.
Including small business, and especially small business, because they do need data, and they also need to learn from our claim data, which is why we intend and do share claim data, even targeted towards small businesses.
And the way we've reduced, as a small business, the way we've reduced our risk is we utilize the cloud. We're a Google shop for all of our workspaces, and we use Amazon as well, multi-cloud. But it's a shared responsibility model.
Yep.
Right? And we don't have like the IT expertise. We write about it, we talk about it, we opine about it, but we don't apply it. We're not practitioners.
Our expertise.
So we rely on partners like Chubb and our insurance partners to say, hey, you need to fix this, fix that. There's a list of things that you need to do now. And there's an incentive to do it. Pay less in premiums, or there's a disincentive if you don't do it. There's a stick if you don't.
Yeah, and what's exciting about the Google Cloud program is you now have a multi-cloud, multi-agent from an AI perspective where that visibility increases, but also the controls that matter, you can kind of spread beyond just one product or one provider.
So that was my next question. Your scope, your scope can transcend just your world into ours, is that right?
Yeah, so the risk protection program at this point in time is focused on Google, but we are connected to Security Command Center, which is a broader product, and Security Command Center has multi-cloud capabilities, so it's something that we're definitely looking at.
It's evolving, yeah.
Yeah, the other thing I mentioned just when focused on Google in particular is that one thing that we're noticing at SMBs is that they're starting to differentiate, insurance companies are starting to differentiate based off of the technology provider that is behind the SMB. So if you're using Google, for example, versus another technology provider, is your risk different? And something that we have found that's been really interesting, kind of independent of Google, is that the insurance industry is starting to come up with these statistics that say that Google Cloud customers have less claims than other customers. And there's 2 main statistics that have come out. One is if you're using Google Workspace versus competitors, you have 54% less claims. Which is
that's significant.
A significant number, right? And especially for SMBs that don't have their own like dedicated big security teams, that technology use matters, and that can really help over time. And for Google Cloud, we got a statistic from Cowbell that was 28% less frequency for Google Cloud users versus others. So that's also another reason we're partnering with the insurance industry, is so that they recognize what technology providers are doing in this space to help reduce risk for customers.
Okay, so you're making it a differentiator, and
yep.
And Mandiant is obviously an enabler given the threat intelligence. And
Absolutely.
of course you probably can't talk about Wiz, but that's another leg of the stool.
Talk about Wiz.
I get it, but we're very excited about that. So
yes.
As are many folks in the industry. So.
We can talk about it.
Yeah.
Yeah, Mandiant is a preferred incident response provider for all of our partners, so they're on the panel across the board, and of course their threat intelligence is excellent, their incident response is excellent, and so we're working with them very closely on the program as well.
What's the effect of AI been on both of your days? I mean, I realize it's a hot topic and we're all talking about it. You've been ensuring activities like this, AI, ML, not historically brand new. However, with Gen AI and the adoption thereof, a lot more vulnerabilities entering the system, a lot more tools for those posing a threat. Yeah, I'm just going to leave the question at that. Yeah, go for it.
Just from a conference standpoint, I mean, I think the word AI has been referenced in every 20 seconds. So,
Yeah.
so without question.
We made it like 13 minutes there. That was
I know,
pretty good. I am impressed by us.
Without question, there is significant focus and driving growth with Google Cloud, specifically on AI workloads. So again, what does that mean? It's multi-agent, so there's multiple workloads that are kind of the focus. I think from an underwriter's perspective, there's a recognition that as AI workloads continue to transcend and change, that is something that we as underwriters need to think ahead. So again, pre-mortem thinking, not necessarily risk-based, but as we look at some of the different AI workloads that come in, and as we look at how that influences different industries, that is something that is of focus. So again, the dependency on a Google Cloud with an AI workload, and if and when there are issues, obviously that is something that we're focused on, but it's also something that we can't ignore. AI adoption and AI engagement is here. If we were to do the same thing, I'll take kind of cloud adoption from yesteryear. If we were to say, hey, you can't adopt cloud, we wouldn't have a portfolio. And same goes for social media. If we were to say, any company that uses social media, we can't underwrite, we wouldn't have a portfolio. So again, we're focused on this. We are good at risk. We are good at understanding risk. We're disciplined, thoughtful. And again, our job is to stay ahead and make sure that we understand and learn from not just claims, but from kind of the threat intelligence teams as to how AI is being used.
We heard a little bit about quantum chips. I want to ask you about quantum. I'll tell you a funny story. I was at Palo Alto Ignite a couple weeks ago, and it was an analyst roundtable with Nikesh Arora, who's the CEO. And one of the analysts asked him about quantum and the threats of quantum and the impact on the cybersecurity industry. And his answer was quite interesting. He said, the bad guys don't need quantum. They're doing fine, just fine without it. So I'm not that worried yet, but quantum, of course, is coming. Do you have a similar opinion or any other thoughts on quantum's impact?
I'll start a little bit about quantum, a little bit about AI, and then you should double click on it. One of the announcements that we have today with the risk protection program is that we're partnering with the insurance industry to make sure that the cyber insurance that we're offering keeps up with technology trends. And so one of our big announcements is that all risk protection program customers will now have access to affirmative AI coverage through the policies across Chubb, Beasley, and Munich Re. And then in Chubb's case, we have a specific coverage grant for quantum exploits that Matt can talk through. But one of the things that we're trying to do is make sure that we're representing as much as we can the customer view of driving down uncertainty on these risks when you're buying insurance to make sure that you kind of know what you're going to get or not. But on quantum, I'll hand it over to Matt because we have some exciting updates.
Yeah, no, and
really?
part of what we want to make sure is that there is recognition that being prepared for PQ, I'll say Y2Q, is something that every company needs to take seriously. And as the insurance industry, as we define these things, and again, Monica mentioned the quantum exploit coverage. It's an affirmative grant for quantum exploits if and when those regularly occur, which is ultimately recognition that we have exposure to quantum exploits when we do get to Y2Q. What that does, that informs the insurance buyers, it informs the brokers that sell cyber insurance, but it also informs underwriters that these are exposures that exist. And preparedness and readiness for a post-quantum world is everyone's issue. We're just trying to get ahead of that and illustrate, look, these are things that are covered today. They have a definition. There's an affirmative grant here. Let's prepare instead of let's kind of wait and see what happens.
Yeah, Y2K without a date.
Yeah, well, I was just going to actually ask Matt, when do you think Y2Q is going to be?
I recognize that I am an underwriter, not equipped to answer that.
You said that statement with such confidence moments
Even
ago.
Jensen blew that question, so you don't want to touch that one.
I do. Opportunity.
You might be right.
Again, we are good underwriters, but predicting Y2Q is not something I'm capable of.
All right, well, how about I'll give you my final question for you today. Let's do a prediction that may be slightly less controversial and risky. When we're hanging out at Google Cloud Next in 2026, what do you hope to be able to say then that you can't yet say today? Monica, I'll start with you.
Ooh, what do I hope to say? I hope that, so what we're doing with the risk protection program is really trying to push cyber insurance forward. Like it is new and innovative, it hasn't really been done at scale. So what I hope to say in 2026 is that this has scaled massively and really helped a bunch of customers, and then we're on our journey to the next step for this program.
I hope to say that the data ecosystem changed from 2025 to 2026. The significance to the cyber insurance industry of this program, again, internal telemetry data sharing to 3 very large markets, with the inclusion of insurance brokers and agents as part of that ecosystem, it's exciting. So what I do think I hope to sit here next year and say, this is successful because the buyers and the decision makers within Google Cloud Consoles really understand how cyber insurance is purchased, but why data matters, and which controls matter are kind of a key to that equation.
Well, we look forward to, oh yeah, go for it.
And they've improved their risk as a result of it all, right? We're getting to a place where we're informing better risk decisions.
Well, I am confident you'll get there. I look forward to telling those stories at scale, and congratulations again to both of you on the announcements and the hard work that you're doing. It's great.
Thank you.
Thank you so much.
Thank you, Dave. We're going to keep having some fun over here. I hope
we
you're
are.
all having a great time. We're in Las Vegas, Nevada at Google Cloud Next. My name is Savannah Peterson. You're watching theCUBE, the leading source for enterprise tech news.